modeling, if we now do see more tariffs imposed, frankly, on any nation, but on the EU, does that massively change the market sentiment towards whether trade generally as a topic is improving?
I would say trade generally is improving, yes. I don't know that it's so big a blow across the board that it's really going to spook folks, but in autos, without a doubt. I mean, in the affected sectors, I don't think it's remotely priced in.
Let's move on. Tech stocks, a major drag on the market today. Josh Lipton following that for us. Josh.
So, Will, tech has been the place to be in 2019, surging more than 25%. But today, tech is slipping as investors worry about the economy. Check out Apple. Monster 40% move this year, but today it's falling, despite notes we saw from those analysts calling out bullish checks from the company's supply chain. Microsoft also in the red, even as Satya Nadella surprised us with that new folding smartphone. And finally, check out the SMH negative today, though keep in mind, of course, investors have piled into the chips. The SMH up more than 30% this year. Guys, back to you.
Josh Lipton, thank you. Josh Brown, what are the semis telling us? Is it a similar story to the small caps that transport some of these other sort of early economic indicators?
Yeah, I've said before that I feel like transports are in many ways, that semis are in many ways the new transports. So for 100 years we had Dow theory, and it was heavily predicated on the movement of physical goods around the economy, and of course that makes intuitive sense. And there were even some instances where it didn't make you look like a fool acting on it. I feel like semiconductors in the information age are playing that role, the movement of data and information around the world. And a lot of these semiconductor businesses, big publicly traded chip companies, they're global businesses. Not only are they manufacturing overseas, but they're selling around the world. The United States is not the primary market or the primary end user of what they make. So I don't know that they tell a story about a U.S. recession so much as they echo the story of what's happening globally, which I think it's undeniably not a great climate right now.
Mike, Apple might be down 2.5% today, but it's actually a relative outperformer over the course of the 3 trading days.
It had another trip up almost to the highs, and in fact, the other day was really bucking the trend negative. It's interesting. It often does have one of these runs at the end of a market rally, and then we've kind of come in from there. So I don't know that it's really a bellwether in that sense.
We've got just under 7 minutes, 6.5 minutes left of trade. We are down 487 points on the Dow. We briefly went down 500 points just moments ago. The low of the session was down 599. If you're just joining us, you might notice your screen looks a little different. We've launched the Market Zone, where we bring you uninterrupted commercial-free coverage into and after the closing bell. On the right side of your screen are the biggest winners and losers of the day. At the bottom of the screen, you can see a preview of the next few stories we're going to cover as we approach and go through the close.
In terms of the Dow right now, which is down 489 points, there's one component in the green. It's Johnson & Johnson bucking the trend today. And Meg Terrell has the details on why. Meg.
Hey, Morgan. Well, J&J is up after the company reached a settlement in the first federal opioid case, which is scheduled to go to trial later this month. The health giant agreed to a total of $20.4 million for 2 Ohio counties, making it the 4th drug maker to settle to avoid going to trial. Now, this doesn't mean that J&J is done with the opioid suits. There are still thousands of cases consolidated in a federal multi-district litigation. But analysts say that they see these settlements as a first step to a potential broader resolution. And they extrapolate from this amount that J&J's settlement total could be around $4 billion, much less than the $10 to $15 billion estimated by Wells Fargo. Guys, back to you.
Meg Terrell, thank you. Josh Brown, is this a situation where bad news isn't as bad as it could have been, and thus the stock's rallying?
Yeah, I mean, you know, when you have some sort of tort action or the potential for class action or various states' attorney generals swarming around something like this, the estimates, the range is like that. So now all of a sudden you compress it down to this and you get some sense, all right, this is going to end, we're going to get through this. So I think that's something that you could read into this.
Let's have a look at the volatility index. Mike, you've been digging into this.
Yes, the fever kind of spiked a little bit in the middle of the day. We got up to about 21 on the VIX. If you look at a one-year chart, again, puts it in context. So this sell-off has not had as much of intensity of hedging activity as we saw in August. In August 5th, we spiked up to about 25. It shows you this has been a relatively contained little pullback that we've had so far in the last couple of days, at least so far. Obviously, that tremendous run up into the 30s in December was at the climax of a 20% downturn in the market. So it kind of tells you that we're on alert, but not yet in panic mode in terms of the VIX. And then if you just want to look at the up and down volume today, it's been pretty much an 80% declining volume versus advancing volume. So pretty decent, washout type conditions. I think tomorrow you're going to hear people say we're pretty oversold, even though we're only 5% from the highs in an uptrend.
Josh, what's your take on the VIX? You keep an eye on that closely?
Well, it's coincident, so it doesn't signal anything about the future. It tells you what's happening now. So I just look at the Dow down 400 plus. I can pretty much guess where the VIX is going to be.
But at the level it's at now, is that still cheap for protection relative to your fear level yourself at the moment?
If you're using options as your preferred method of protection and you say to yourself, this is going to get worse, we're only down 5% from the high, then yeah, the answer to your question is that would be a place that I think you could obtain cheap enough insurance. But then the question is, what are you trying to insure? And if you're really over invested and you feel that you have too much exposure to the market, you have another option. You don't have to hedge it, you could take it off.
The Dow is down over 500 points with just under 3 minutes left until the close. You're watching Closing Bell in the market zone. Let's send it over to Rick Santelli for a check on bonds which have had a big effect on equities this week. Rick.
Oh, absolutely. There's a lot of cross-fertilization going on after yesterday's number. We look forward to tomorrow's service sector ISM. Look at a 3-day of 2-year notes. We've covered 20 basis points from the high at 167 to the low at 147, and we're hovering just a basis point above that. If you go to the 10-year, we've covered, well, from 175 to 158, so a rather large range there, but definitely the long end is doing better. The 30-year bond was briefly unchanged. Look at 10s minus 2s, a 2-month high basically, trading around 12. Now we're going to go to Courtney at the NASDAQ. Not all NASDAQ stocks are created equal today, are they, Courtney?
That's absolutely right, Rick. And we're going to focus on the consumer and those stocks really in general, because if you look at the XRT, that's the retail ETF, and that has been selling off to a much broader degree than the regular market, down about 2.5%. That's concerning because the consumer has been what's held up this market. Best Buy CEO said, yeah, I saw the consumer confidence numbers hitting a 9-month low, but we haven't seen the weakness yet. Well, guess what? Shares of Best Buy are lower today. So are shares of department stores. We know that's a format that's largely in question going forward. Our department store is going to be a place where shoppers are going to want to go. And on a day like today, they're seeing those names sell off, along with names like Capri and Tapestry. These two names here, these premium accessory and apparel makers, tend to see these bigger sell-offs on these market sell-off days that we've seen in recent months. Now to Bob Pisani at the New York Stock Exchange.
Thanks very much, Courtney. Let's take a look at the S&P 500. Been a pretty wild ride today. So remember, we closed yesterday at 29.40. We went as low as 28.75, just a little before 1 o'clock Eastern time. And we have bounced off of that. So we are sitting at 28.87, good 14 points above that, but not far from the lows for the day. There was a lot of talk about the health of the consumer and what's going on. One big ticket item did pretty well today. Lennar, big housing company, announced excellent earnings results overall. Mr. Miller talked about positive wage growth, lower supply overall. That's a new high for Lennar. Pulte, competitor for them, also hit a new high. Not so much any rally in the energy sector, where we are continuing to see many sectors, many stocks hit new lows. Marathon Oil, EOG, particularly a lot of these exploration and production companies like EOG hitting new lows. Concho Resources hitting new lows as well. And there's the closing bell. The Dow Jones Industrial Average down 491 points. The S&P 500 down 52 points.
If you're just joining us, welcome to the Closing Bell. I'm Wilfred Frost.
And I'm Morgan Brennan, in for Sarah Eisen, along with Mike Santoli, CNBC senior markets commentator, getting a look at how we finished the day here on Wall Street as stocks settle. The Dow finishing down 491 points, or about 1.8% lower today. Believe it or not, that's actually low off the lows of the session. The S&P also finishing down about 1.7%, or down 52 points. NASDAQ as well, much lower, 1.8%, and just really across the board, a lot of selling with every sector in the S&P in the red.
Yeah, we were down 500 points for moments in that last 10 minutes of trade, but just closed above the level. Still a lot of selling, as Morgan pointed out. But we've got some breaking news on trade. Kayla Tausche has the details.
Well, Wilfred, after getting a green light from the World Trade Organization, the U.S. government is set to release a new list of tariffs on European Union products as soon as tonight, according to senior officials from the Office of the U.S. Trade Representative. This list is set to include aircraft as well as agricultural and industrial products. Aircraft will be hit with a 10% tariffs. The other products will be hit with a 25% tariffs. We are awaiting the details on exactly which products will be included. Now, these tariffs are going to appear in the Federal Register within the next few days, and we are expecting that these tariffs will take effect on October 18th, according to these officials. But just before the tariffs are set to take effect, the U.S. and the EU are set to have a meeting over trade. That's expected to happen on October 14th. Unclear what, if anything, that meeting could yield, but important to note that it is a few days before that October 18th effective tariff date. So we are on watch for that tariff list to see what it includes when it comes out, Wilf. But certainly the U.S. is wasting no time in announcing its actions after this ruling came out. And senior officials say that if Brussels tries to retaliate in response, that it believes it has no basis legally to do that.
Kayla, does the administration think of the EU as a totally separate issue to China, or does this indicate that broadly the administration is upping the ante on trade in general?
Well, I think it does separate the European issues from the Chinese issues. They're on somewhat parallel tracks here, Wilf. You know, you remember that this WTO case between Boeing and Airbus has been going on for the better part of 15 years. There's still another decision on Boeing and the tax benefits that it gets from Washington State. That's expected early next year. And then, of course, there is a European auto tariff deadline on November 13th. So there are a few mile markers for the U.S. and EU on trade. We know that the negotiation lines have been open, but so far little progress, according to officials, has been made.
Kayla Tausche, thank you for bringing us the latest on this. Mike Santoli, how does this factor into what we've seen in the market today in general?
I mean, the market's already been in a little bit of a defensive crouch. I wouldn't say particularly about this issue. It's sort of priced out, I think, any kind of genuine progress on trade. I think this is going to be a matter of looking through this list of tariffs in terms of products that it applies to, and then figuring out, pricing out the implications from there, because I think it really is going to matter a lot exactly how they're applied.
Josh, what's your take on this as to whether or not this will spook the market further on
Madness.
trade?
There's no reason for this. He's on a parallel track. The president is screaming that interest rates are too low, and that's what's holding back the economy. It's right in your face every day what's holding back the economy. We don't have corporations holding back from expanding operations because 1.85% is too much of an interest rate to borrow at and invest. That's not the reason. This is the reason. And now we're going to expand it even further? It's absolute madness. I completely don't understand. And look, if you had some success doing this with China, and then you said, let's do it now with Europe, you have no success doing this with China.
I'd also just point out, guys, the Eurozone economy is very weak already, particularly some of these sectors that are going to be in the eye of the storm. And whether they've been more exposed to the China trade war, they're certainly going to be very exposed to this. And it's definitely a region that might not directly influence U.S. growth, but directly influence sentiment, it influences yields, and all of that, Mike, has significant ability to infect the markets here.
Right, and it would sort of push the markets in the direction they're already kind of leaning, which is into this, growth scare. And I do think that if, in fact, that's how the markets take it, it's just going to reinforce it for now.
All right, we want to bring in Alicia Levine from BNY Mellon Investment Management to this conversation as well. Alicia, I want to get your take on these retaliatory tariffs on some goods being imported from Europe and what it would mean for market moving forward.
So this is just another incremental negative for the market. And for most investors, they were not focused on the European tariffs at all. And to the extent that we really have not gotten anywhere with China, it does feel like a piling on and just an increasing of the negative sentiment, making it very, very hard for the market to move forward here.
Alicia, today with this kind of selling that we've seen, we should remind everyone, of course, down 494 points on the Dow. Was there anything that you were advising your clients to buy, any sector that looks cheap and sees this selling as an opportunity?
So eventually there could be an opportunity, but what we see is a really choppy market moving forward. It's one of those strange markets where it's really very dependent on macro data. So we have the ISM services number coming out tomorrow. We have the BLS number on Friday. And these numbers are really going to tell us whether the manufacturing slowdown here in the U.S. has pivoted over to what's really keeping the economy afloat, which is the consumer and the services section. And we actually need the data to see it. And when you have a market that's so dependent on signals like that, it's just very hard to invest. So we see more choppiness, more volatility, and we wouldn't be surprised to see the market move towards the 2,800 point and the tactical level just testing.
Josh, the market seems to be moving towards pricing in a greater chance of a rate cut at the end of this month. Do you think that happens?
So I think it does, only because of market direction, and that can change really quickly. But I really do believe that all the commentary, all the data that goes into the Fed decision, at the end of the day, they look at sentiment, and sentiment, the best possible measure of sentiment is the S&P 500. I do think the 200-day moving average factors into decisions, even if they don't say it out loud. There are a lot of Bloomberg terminals in the Federal Reserve building these days, much more so than there used to be. And actually, that sounds bad, but it makes sense. The stock, we reorganized the whole economy around the wealth effect. The wealth effect comes from three places. Did you get a raise? Is your house up in value? And how's your 401k doing? So it's not ludicrous to say that the Fed will look at what's going on in stock markets. And so I do think that we're moving closer toward that moment.
But the Fed also, in a data-dependent mode coming out of the last meeting, was watching for the pace of activity. And you get an ISM below 48, whether you think that number is magic or not, it's enough to say, fine, we want to probably try to get ahead of this, at least on, pending Friday's jobs number.
But Mike, is that enough now? With the sentiment already worsening and the momentum moving against you, is that enough to help the market kind of
Is a Fed rate cut enough?
Yeah.
It probably could incrementally be. I mean, look, again, we're not in a disaster mode right now. I don't think it matters that much. That 25 basis points doesn't really matter.
A couple of weeks ago, we might have had that cut with the data still looking strong.
That was the market's implicit bet coming into October.
Imagine a scenario where you get the rate cut and the market sells off anyway. That would be the only evidence you need that...
That's quite likely at this stage, is it not?
That would be July. That happened.
The global trade sit, that will tell you that the market is now fixated on whether or not the earnings estimates going out to 20 are safe because of not where rates are, but the international trade situation.
Alicia, I want to get you in on this debate. Who do you agree with and why?
So I think the Fed cuts again at 25 basis points, but money is already inexpensive, and corporations can borrow. The issue is, do they want to, and do they want to expand? I don't think another 25 basis points is going to help the real economy all that much. We will wake up tomorrow morning with global yields lower, which will probably pull our 10-year lower as well. And that's a problem, because then you kind of get this reinversion probably on the 210s, which is another recession signal. So the problem with the trade issue is that you're just pulling the long end down.
I just want to bring out the point again. We're debating whether the Fed can do anything to turn market sentiment around. I do feel for Christine Lagarde going into the job of the ECB. Already today, we got Jens Weidmann, the head of the German ECB, saying he doesn't want to authorize more bond buying anyway.
It's not helping.
Which might
help.
Sure, but what do you do in the short term to offset now tariffs on top of already a manufacturing slowdown?
Yeah.
The Eurozone data is not going to improve in the short term if these tariffs come into play. And that's an incredibly tough situation.
They have banks that are zombies. They had a chance to do what we did, put them all through reorganization, create the buckets of bad assets and let those work through. They didn't do that. They covered it up. They've been doing this thing where now they're cutting further into negative territory. What that's doing is taking already fragile bank balance sheets, making them worse. And the United States can do fiscal. Probably not now because they all want to kill each other. But that's a difference. They can't do anything fiscally across the continent of Europe. They're separate governments. They have different regulations. They have different tax regimes. It's just not going to work. So I don't know that it's as simple as, oh, we'll just cut more. Or, oh, we'll just buy, now we'll buy European ETFs. Ain't gonna work that way.
Not for nothing. You have just had both the House Speaker Pelosi and Senate Leader Mitch McConnell, who was on our air earlier this week, float infrastructure. So we'll see what happens with that. Obviously,
that would be great. I root for it.
But let's get over to Bob Pisani with a check on today's biggest losers on Wall Street. Bob.
And what this is about is watching the U.S. consumer, the engine of global growth. You want to watch some big names that have done really well this year. You want to watch your Costco's, your Home Depot's, your Starbucks, for example, your Nikes, and your McDonald's. Big gains on the year. If these were to start dropping significantly, Starbucks already a little bit weak, but if you start seeing 20% drop, 15% drops, that's certainly a sign there's concern about that. Where consumer, two big ticket items today, kind of going in the opposite direction. Housing was great. Lennar had outstanding numbers today overall, and yet we saw Ford weakness there overall. Look at these moves here. Home building up 16% in the last few months, and housing is up 16%. Auto manufacturers down about 11%. There's Lennar. That's a new high for Lennar. Great numbers out of the big home builder there. Ford disappointment there. Car sales in the third quarter were disappointing. General Motors also to the downside. Finally, just want to note E-Trade, just the press release just out from E-Trade. They are matching 0% zero cost commissions for equities and ETFs. Of course, TD Ameritrade did that yesterday. Charles Schwab did it earlier in the week. Guys, back to you.
Bob, thanks so much. Josh, I want to pick up on that particular story with you. We were discussing a bit before the show. What's your take on all of these brokers cutting to zero?
I blame the market sell-off. People were waiting for commissions to be lower. Now they're zero. Everyone sold at the same time. I wish they hadn't done that. It's phenomenal. It's a huge win for the individual investor. It's great for me, my clients, when we buy and sell various stocks and ETFs. Some of them we have to have the client pay a commission on. Now that goes away. So the joke I made internally, Barry and I woke up this morning and we made our client costs lower just by getting out of bed. So, like, from my standpoint, I'm glad they're doing it. We got the call from all of our custodians this morning. Don't worry, we're doing it too. And we even got firm dates. So you will not hear me complaining.
Alicia, when you see a stock like Lennar hitting a fresh high today, closing up almost 4% in what's been a pretty rough session, some robustness there in the housing market. How closely are you watching that? And do you see it as an outlier or maybe potentially a read-through that the economy here is holding up better than the market has been fearing?
So the rate cutting went to work, right? So we've lowered the 30-year mortgage rate, and we are finally seeing some life into that in the housing market, which has really been very sluggish for the entire recovery. We just haven't really seen an acceleration of first-time housing buying. So we're seeing that now, and that's ultimately why we don't actually see a recession coming, because you see fundamentals still working in the economy eventually will filter through. But the issue really is, if you don't have CEO confidence moving forward, if you don't have small businesses willing to hire, then you really are going to hit the real economy on the consumer side. And the trade issue is pivotal here. It is not noise. It's fundamental to actual economic decisions that corporations are making.
Alicia, Josh, thank you both so much for joining us today. Now, stocks selling off for a second day in a row, with all the major averages erasing their gains for September as fears of an economic slowdown persist. Joining us now to discuss further, David Rosenberg, Chief Economist at Gluskin Sheff, and Tom Lee, Head of Research at Fundstrat Global Advisors. Very good afternoon to you both. David, you must be a little embarrassed. You were so bullish for so long.
one divided by T.
Talk us through, David, the amount of data we've seen this week and whether you need to see it confirmed now by services and jobs on Friday to really confirm the bearish outlook you've had for so long.
Well, here's the problem, Wolf, is that by the time you wait for the confirmation as an investor, your head's been sliced off. So the bottom line is that for all the talk about what a low share of manufacturing is of the economy, it reminds me of all the pundits coming on your show 12 years ago telling you what a low share housing is of the overall economy, without talking about all the powerful knock-on effects that housing and now manufacturing has on the overall economy. So it starts with the goods producing sector, then with a lag, it hits the service producing sector. The reason why services are so slow to move down is because social services and education, healthcare, are not really cyclical. What moves first when you're heading into a recession is the economic sensitive sectors, and they're behaving classically as they typically do ahead of an economic downturn, and it's not different this time around. And by the way, it's not just the ISM, breaking below 48. Look at the transports to utilities relative strength index. It's broken down. It's slumped more than 30%. Coming off an inverted yield curve, the small caps are now within 4 percentage points of an official bear market. So, it's not just about the economic data. There are signposts in the fixed income and the equity market telling you that the economy is going to be slowing down even further from where it is right now.
Tom Lee, do you agree?
Yeah, I agree with most of what David's saying in terms of, I think we're seeing visible weakness. The weakness is born out of that downturn in oil we've had. The trade war, I think that's really hurt inventories and the business cycle. And we had Fed tightening last year. So I think that these, cumulative effects are definitely, a drag on not only manufacturing, but, of course, investor sentiment. I probably don't agree, where we're going to sort of break with David is the idea that this downturn is the start of a cyclical, recessionary dynamic. And I think instead it's actually just a correction.
So Tom, where are you in terms of your S&P 500 forecasts for the next 6 to 12 months?
Well, I think that this sloppiness has been really sort of, communicated by the bond market for some time. We've written since the start of this year that the ISM would likely break below 50 because of what the 1030 yield curve was telling us, and it should bottom in September, October. So it sort of followed the course that we've expected. But I think now we're going to start to see the benefit of Fed easing. There's been a huge inventory correction. On top of that, from a market position, as you know, the put-call ratio has gone wonky today. That's usually a sign of a bottom. The daily relative strength is about to touch 30, and that's a tactical signal. Most of our clients are sitting on cash or really bearish. So, to us, the most unexpected thing and the thing that we think is most probable, therefore, is a big rally into year-end. And I think we're still going to break 31.25 before the end of the year.
David, the last time we saw a contraction in manufacturing data and a so-called industrial recession was back in, 2015 into 2016. It didn't bleed over into the services and consumer side of the economy. Why does this feel different to you?
We are in a totally different bog of uncertainty right now. I mean, in 2016, were we in the middle of a global trade war? The answer is no. In 2016, the Fed at that point had only raised rates once. Go back to 2016 and look at the shape of the yield curve. It was steep. And look at the shape of the yield curve today. It's flat. I'm continuously amazed at people that dismiss the yield curve, cycle in, cycle out. And it's not necessarily about whether it's inverted. The shape is flat as a pancake, and it's telling you that growth is going to be slow. It's interesting that nobody ever has a problem with the yield curve when it's steep. It's a wonderful indicator. Only when it's flat do people question its veracity. So you have a different shape to what the bond market is telling you. We're in a much different bog of uncertainty related to trade. And coming into 2016, if you remember, we're heading into the election. Donald Trump got elected. We had a sweep by the Republicans and tax cuts coming our way. What's happening right now that nobody's talking about is this impeachment proceeding and this Ukraine file. It's not really what it's doing to Donald Trump. It's what it's doing to Joe Biden, and then what it's doing to Elizabeth Warren's prospects. This is, I think, what people are looking at behind the scenes is the rising prospect that we could see a Democratic sweep in November of next year. And with capital gains taxes, dividend taxes, wealth taxes, I mean, we could see a radical shift in fiscal policy that we've never seen before on top of the trade uncertainty. So I would just ask, I would ask Tom, who's a friend of mine, who is going to be committing capital to the economy in this bog of fiscal and trade uncertainty? So what happens here is that you start cutting your capital spending and spending intentions as a corporation, which, by the way, is in the data. And then with a lag, you start seeing it in hiring intentions and employment, and that's when it starts hitting the consumer. That'll be the story a quarter or two out, but I see it in the tea leaves.
Tom, your response?
I think David's nailed it on the head. The biggest risk to this market would probably be a shift in the White House. I think investors would be pretty nervous about what it would mean to have a Democratic president. And so, yes, I think in a way it's kind of circular. I think if the market holds up, I think Trump stands re-election. But if the market tanks, it raises the prospects that David just mentioned.
David, one quick final question. I just want to ask you what you thought the impact of the extra tariffs on the EU might have to Eurozone growth, and whether that can affect the US in the short term.
Yeah, absolutely. And then on top of all that, the stepped-up Brexit uncertainty, and we already know that Germany, which is the engine of the entire continent, is pretty well either in a recession or on the precipice thereof, and there's going to be knock-on effects. The one thing we learned from the last cycle is that no country, maybe outside of Albania, operates in a vacuum. So yes, when you look at what Germany means for the entire EU, and the EU as an economic unit is actually bigger than the United States, the reverberations back again towards the export sector, and then the knock-on effects throughout the economy are going to be relatively powerful. There's just lag separating this forecast right now from what's going to be happening by the opening months of next year. So I do think what's happening in Europe is very important. I think at the same time, all these things are keeping the U.S. dollar sky high, which is an added tourniquet on the U.S. manufacturing sector on top of everything else that's going on right now.
David, Tom, thanks both so much for joining us. Great bull-bear debate. We've got some news on Apple. Josh Lipton has the details. Josh.
Wilf, the biggest issue of our time. That's how Apple CEO Tim Cook has talked about DACA in the past, the immigration policy known as Deferred Action for Childhood Arrivals. Cook has repeatedly spoken out on behalf of these dreamers in tweets, conferences, and op-eds. Now Cook is taking his support a step further. Today, Cook, Apple HR Chief Deirdre O'Brien, and Apple as a company filing a brief in support of the program with the U.S. Supreme Court, which will consider the legality of DACA policy this term. Apple has filed many briefs with the court, but this is the first time that Cook and O'Brien are lending their own names as well. The brief stating, "We are distressed at the prospect of ripping our DACA colleagues from the fabric of our company. This issue is a moral one. Our country made a deal with a highly vulnerable population interested in a bright future, and we should keep that deal." Apple currently employs 443 dreamers across 36 states, working in a variety of roles: hardware and software engineers, retail store geniuses, and support and operations specialists. In total, remember, the company employs 90,000 people here in the U.S. And remember, this isn't just an issue important to Cook. It's one that really does reverberate across the tech industry. And other tech execs have spoken out too. For example, Microsoft's Brad Smith has called protection of dreamers a humanitarian obligation and economic imperative. Guys, back to you.
It's certainly another very big factor for quite a number of companies. Josh Lipton, thanks for bringing us that news on Apple. Bed Bath & Beyond results, meantime, are out, and Courtney Reagan has been digging through those numbers for us. Courtney.
Hi there, Morgan. So for the fiscal second quarter for Bed Bath & Beyond, it's a bit of a mixed result. Earnings here are beating at 34 cents adjusted. The street had been looking for earnings of 27 cents. Revenues slightly below expectations at $2.72 billion. The street was looking for $2.75 billion. Comparable sales also worse than expected, down 6.7%. That's about on par for last quarter's rate. The street had been looking for those comps to fall, but just 5.4%. However, when you look at the full year revenue guidance, that is about in line with what the street was expecting. The company does say they've made substantial progress on their search for a CEO and do expect an announcement to be coming soon. They also call out good progress on their four main priorities, the first of which is stabilizing sales. And I'm not totally sure that happened here, at least with the comparable sales metric. Shares of Bed Bath & Beyond have been bouncing around after hours and are now at least a bit positive by 0.2%. Back over to you.
Courtney, thank you. Let's send it over to Mike Santoli now for his third dashboard of the day. Mike.
Morgan, icy hot, kind of a contradiction. That's because it's mixed signals here. If you look at some investor sentiment gauges, first, the CNN Business Fear and Greed Index, something we track once in a while. This is real market-based indicators of risk appetite. And what you see is it's declined to levels not too far above the extremes of August. Again, we got to those August lows after a multi-week pullback, down 7% in the S&P, and people got a little bit anxious and bearish. What's good here is that we're coming off of levels that really weren't that extreme to the upside. So it wasn't as if everybody came into October really bullish and has a lot of that to unwind. So that's a good part. On a maybe a little more mixed signal, if you look at this asset allocation by the American Association of Individual Investors, ask people every month, what's your asset allocation? 66.5% stocks, 19% bonds, 14.5% cash. It's actually more weighted towards stocks than the long-term history. So even though people are a little bit worried and tactically feel like maybe the market's a little fragile, they're pretty much into stocks, especially if you look at the ratio of stocks to cash. It is at a relatively high level historically. So the market itself has gotten people in even if they're nervous about it, guys.
Mike, thank you very much. Up next on Closing Bell, behind the global slowdown, markets around the world under pressure today. We'll discuss the big risks with former Morgan Stanley Asia Chairman Stephen Roach when we return.
College football is live on TuneIn. Listen for free to games from more than 140 schools all season long.
To the 10, all the way to the checkerboard. Somebody stays on his feet and scores.
What's happening in college football this week, this Saturday? The scoreboard will be working overtime as Sam Ehlinger brings his vaunted Texas Longhorns passing attack to West Virginia for a Big 12 conference matchup against the Mountaineers. The action starts at 3:30 p.m. Eastern. Just search college to listen today. Major League Baseball postseason is in full swing, and TuneIn Premium puts you at field level for every...
And it's a home run.
Single...
And gone!
Game.
And that gone, a home run.
With TuneIn Premium, catch every pitch of every inning of every Major League postseason game until the final out of the World Series.
0-2 pitch, little half swing, and it hit...
At home or on the road, Major League Baseball's postseason action is on TuneIn Premium.
And that ball is gone.
Upgrade today.
A lot of people aren't aware that TuneIn lets you listen to the same terrestrial stations that you pick up on your FM AM dial, except you can hear them from anywhere. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
It's Liz Hernandez with your TuneIn Music News Update.
Lizzo tells Elle magazine that she didn't like herself growing up. She says, when I was younger, I wanted to change everything about myself. And the reason I didn't love who I was is because I was told I wasn't lovable by not seeing myself in beauty ads, by not seeing myself in television, by lack of representation. My self-hatred got so bad that I was fantasizing about being other people. But you can't live your life trying to be somebody else. To hear music from Lizzo, search today's hits on TuneIn.
In the dictionary, a podcast is this: a digital audio file made available on the internet, typically as a series, of which new installments can be received by subscribers automatically. But on TuneIn, a podcast is this.
I'm Adam Grant, and this is Work Life, my podcast with Ted. I study how to make
work
not
giving you the first and it's defined like this.
Blackout is a suspense-filled thriller from Endeavor Audio and Q-Code.
From news, sports, to pop culture, comedy, and beyond. Define your own podcast possibilities on TuneIn.
Welcome back to the Closing Bell. We are all over today's major sell-off, with the Dow having finished the day down 494 points. Seema Modi standing by with a check on industrials. Courtney Reagan is here with the big movers on the NASDAQ, and Deirdre Bosa has a check on how the recent IPO stocks are faring. Seema, let's start with you.
Morgan, October is proving to be a rough month for the industrials. One is due to the slump in U.S. manufacturing and the ongoing recession alarms. Two, the uncertainty around the upcoming trade talks and if tariffs will be escalated. Remember, earnings from the major industrials like United Tech, 3M, Caterpillar have already been hurt by tariffs and the ongoing weakness in China. The other factor in play here, and probably more important explanation for the recent underperformance in industrial stocks, is the stronger dollar. That, of course, makes goods sold overseas in markets like China and Europe more expensive. Now, another subsector within industrial is getting caught up in today's sell-off. Defense and aerospace names, Lockheed Martin, Raytheon, General Dynamics, all down nearly 2.5% for shares of General Dynamics. Morgan and Wilf, back to you.
Seema, thanks so much. Let's also check in on the movers at the NASDAQ. Courtney Reagan has that for us. Hi, Court.
Hi, Will. So the NASDAQ did close off session lows, still, though, down by about 1.6%, and we've given up those September gains for the NASDAQ. It was a broad-based sell-off. When you look at the kind of stocks that were selling, you had the semi-selling, the biotechs, consumer names, really sort of across the board. Only 10 names ended up positive in the S&P 500 when everything settled out at the end of the day. The semiconductor stocks, those fell about about in line with the broader index. The biotechs, however, sold off, but not as much as what we saw from some of the other groups. American Airlines and United Airlines, those, of course, are part of that transport group we talked about multiple times during the day today. And those were the biggest sellers, really, in the NASDAQ 100, although we had VeriSign and Intuitive Surgical and Walgreens that were also up there. So, again, just sort of indicative that everything that could be sold almost today was sold down here at the NASDAQ. Back to you at the New York Stock Exchange.
Courtney, thank you. Deirdre Bosa has a check on how recent IPOs have performed today. Deirdre.
More pressure on these names. Uber, Lyft, Smile Direct Club continuing to trade far below their IPO prices and near record lows. Some of the enterprise names, they have held up better, but even they're getting hit in this month's sell-off. Zoom, PagerDuty, CrowdStrike, all lower on today's session. Now, the average return from nearly 120 IPOs this year is just 4%, according to data from Renaissance Capital. Half, though, are trading above their offer price, guys, really underlining this double standard that is emerging in the IPO market. Guys?
Deirdre, thanks so much for that. Time for a CNBC News update now. Sue Herrera's got it for us. Hi, Sue.
I do indeed, Wilf. Here's what's happening at this hour, everyone. President Trump continuing with his harsh words for House Intelligence Committee Chair Adam Schiff as he denies reported contents of a phone conversation at the center of his impeachment inquiry.
I had a great call with the president of Ukraine. It was 100%. You have the transcript. And then Schiff went up and he got, as the chairman of the committee, got up and related a call that didn't take place. He made up the language. Hard to believe. Nobody's ever seen this. I think he had some kind of a mental breakdown.
Russian President Putin sided with President Trump in the political storm that's raging in Washington, saying Trump had done nothing wrong by looking into possible cases of corruption in Ukraine. He also briefly joked that Moscow would hack the 2020 presidential election. And Prince Harry and his wife Meghan meeting with the South African president and his wife in Johannesburg. This after Markle sued a tabloid newspaper that she claims illegally published a personal letter that she wrote to her father. The Daily Mail says it will aggressively defend the charges. You are up to date. That's the news update this hour. Guys, I'll send it back to you.
Sue, thank you very much. Now, just moments ago, the U.S. announced it was imposing new tariffs on European Union goods, including a 10% tariff on aircraft and 25% on agricultural products. Those are set to take effect on October the 18th. For more on how escalating trade tensions could impact the global economy, let's bring in Stephen Roach, Senior Fellow at Yale University and former Chairman of Morgan Stanley Asia. Stephen, thanks so much for joining us. Let's kick off with those new tariffs being introduced on the EU. Are you surprised to hear that? And how significant an impact might that have on growth and trade between the two regions?
I'm not surprised. I mean, this has been brewing for a while. It's actually, compared to the tariff battles with China, this is small change. So it's really not of enormous material consequence. But it's emblematic of the fact that political leaders, especially our own president, feels empowered to deploy tariffs as an instrument of international economic policy without any appreciation for the tragic history of actions like that in say, the 1930s or in other periods as well.
Stephen, in terms of those trade talks between the U.S. and China, they're expected to meet again here in the U.S. next week. What do you think is baked into the market in terms of expectations? And do you think we could actually potentially get some sort of deal in the coming weeks or coming months?
Well, I think, there's hope, Morgan, but I think realistically the best we can look for would be a superficial deal giving the Chinese the opportunity to buy more soybeans, possibly some airplanes. But the big structural issues on technology transfer, intellectual property theft, allegations of illegal subsidies of state-owned enterprises, we're nowhere on those. And the U.S. side is insisting on an enforcement mechanism that China is not going to buy into. So no big deal, but maybe something cosmetic, and even that I think is a stretch in light of other issues that are on the plate between the two countries right now.
Where do you stand at the moment, Stephen, as to the global growth environment and whether we're likely to hit a recession in certain regions and how soon that might arrive?
Well, I think we're in a pretty precarious place, Wilf. I mean, the issue on terms of trade tensions, which I don't think is discussed because it sounds a little technical, is that we live in a supply chain world. So when we impose tariffs on one country, they're being spread immediately to many, many countries around the world. I think the numbers on a study I just read showed about 73% of all the expansion in global trade since the early 90s has come through supply chains. China accounts for the bulk of that supply chain-centric activity. So we're not just putting tariffs on China, we're putting tariffs on a number of countries in East Asia, including Japan, Korea, Taiwan, and others. And that's why global trade is so weak, and that's why the global economy from East Asia to Germany and elsewhere in Europe is really being hit hard by this seemingly bilateral tension between the U.S. and China.
Stephen, just quickly, a final question on your latest take on the situation in Hong Kong.
Well, I think it's tragic. I think it's a great city. I lived there for a number of years, and I think Hong Kong is going to have a difficult time reclaiming its former mantle as a world financial center. I don't think it's of major consequences to the Chinese economy, but it certainly does challenge their ability to manage their external relationships as well.
Stephen Roach, thank you for joining us today.
Thank you.
We've got some news on Tesla. Phil LeBeau's got the details. Hi, Phil.
We'll take a look at shares of Tesla, now down about 5% in after-hours trading. The company reporting Q3 deliveries falling shy of Wall Street estimates. The estimate on Wall Street was for Q3 deliveries of about 99,000 vehicles. Tesla says it delivered 97,000 vehicles. 79,000 and change were the Model 3. The remaining 17,000 and change were the Model S and X. But again, shares of Tesla under pressure a little bit after hours as the company reports slightly weaker than expected Q3 deliveries of 97,000 vehicles. Guys, back to you.
Phil, just looking at it, so SX is 15% growth. Model 3 is a bit softer at 8%.
Yeah, but what we're looking at here, don't get too caught up in the percentages. What you're looking at is that total number, because remember, everything's coming out of the Fremont plant and going all around the world. And what they've suffered from in the past has been lumpy deliveries. Certain regions would ramp up faster than other regions would ramp up. What we're looking to see more is a consistency quarter to quarter to quarter from Tesla. And the 99,000 was the expectation people had. That's nice growth from Q2, which was at 95,000. So 97,000 is a little bit better, but it's not at that rate of 99,000.
Phil, thank you. For more, let's bring in James Albertine from Mile One and David Whiston from Morningstar. Thank you both for being here. James, I'll start with you. Your reaction to that Tesla number we just got.
Yeah, well, I don't cover Tesla anymore as a sell-side analyst, but now that I'm sort of on the corporate side running strategy for a large auto dealership group, we watch demand for electric vehicles very closely. So even though it may have fallen a little bit short of Wall Street expectations, it's still a very competitive vehicle on the electric vehicle side. And, we're seeing a lot of demand at the higher end from a price point perspective with the Audi e-tron and deposits on the Porsche Taycan. But still, there aren't a lot of manufacturers that have, enough volume right now in dealerships to address that demand that Tesla arguably has unearthed for EVs over the past, 7 or 8 years.
David, your take on this number?
Yeah, we're long-term investors at Morningstar, and I think there's a lot of obsession, for lack of a better word, on these nice round numbers, targets that Tesla seems to get attributed to them or puts on themselves. I mean, in the scheme of things, whether they do 100,000, 500, or just barely miss as they did, what really matters is what does this company look like in 5, 10, 15 years, not so much did they meet this quarter's deliveries. But my other reaction is this is a sign of kind of like everyone who wants a Tesla is starting to get one at this point, and they just don't have cars at a very affordable price point. The Model 3 is not a mass market vehicle.
James, in terms of the auto sales numbers we got in general from a number of different auto manufacturers today, it was somewhat of a mixed bag. There was some gains and there were some negative numbers as well, yet all of the stocks traded lower today. Did that seem warranted to you?
Yeah, look, I think, we're certainly long in the tooth with respect to the auto cycle. We've seen pressure on new vehicle sales for the better part of the last really year or several years even. And there were some, exogenous sort of factors out there to consider this month. Calendar shift, Labor Day moving into August, storm activity impacting Florida, and certainly flooding in the Texas region. But aside from all that, we are, as dealers, I think, having to make more of our profit from the used vehicle side of the business. That was, I think, very strong again in September relative to prior months. The service and parts business is quite strong again in September and has been year to date, growing at a high single digit to low double digit rate on a gross profit perspective. So the pressure on the new vehicle side, we're offsetting that with other aspects of our business, really watching credit very closely, the duration of some loans outstanding, in the 6 and 7 year territory. We want to, I think, take some time to understand, is that a function of, the lower rate environment and banks getting more comfortable lending to consumers from an auto credit perspective, or, are consumers starting to show some signs of weakness? That's the major question, I think, when we think about, where we are in the cycle. To this point, we feel pretty good about it, but that's what we're watching.
All right, key question for investors, absolutely. James and David, thanks for breaking down those numbers and the instant reaction. Appreciate it. Coming up, stocks getting slammed overall in today's session. Dow finished the day down 494 points.
Services
output up one strategist who says the fear in the market is creating an opportunity.
That is the biggest monthly rise since November 2018. So again,
CNBC News Update. MLB is right here on TuneIn.
A swing and a drive to right field. That's it. Well, Ramirez back, and that ball's gone.
And to find it all, you need to search MLB on TuneIn.
By the wall, out of here.
Home and away calls are a click away on TuneIn Premium. NFL fans, hear every live game on TuneIn Premium.
Fake the pro size, no, the ham size. He breaks 3 down to the 5.
Yes,
follow the 30, 20 to the 15 to the 10. 5, touchdown.
This Thursday, hear the home and away call as the Los Angeles Rams visit the Seattle Seahawks at 8:20 p.m. Eastern.
Right up the middle, touchdown. Trying to dive, touchdown.
At home or on the go, hear the home and away call of every NFL game this season on TuneIn Premium. Upgrade today.
MSNBC is on TuneIn. Get up-to-the-minute coverage on news and events from around the world with MSNBC's live 24/7 station on TuneIn. At home or on the go, stay up to date on the latest news and political trends with MSNBC's full lineup of shows, including Hardball with Chris Matthews.
Hi, I'm Chris Matthews. Thanks for listening to MSNBC on TuneIn.
And The Rachel Maddow Show. Plus, when news breaks, MSNBC has you covered with live updates, expert analysis, and more. Search MSNBC on TuneIn today.
What if you could keep up with cable news even when you're on the go? With TuneIn Premium, you can listen to MSNBC live without any commercial interruptions. All of the news, none of the ads. Listen live on TuneIn Premium today.
Good. Here's a swing and a drive deep to right field. Looking up. Goodbye, baseball.
Between game-winning shots and walk-off homers, follow TuneIn on social media to discover the latest and greatest in live sports.
With the 24th pick in the 2019 NFL Draft.
From live reminders that the biggest MLB games are on the air, to recommendations of the best new sports talk shows and podcasts.
He's going to be fine. He's going to be good right away in 3 years.
Follow at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
Live from the TuneIn Studios, I'm Fonseca with your daily sports update. If you missed the wild card action last night, we do have it on demand for premium users. You've got to re-listen to it. Juan Soto delivered a bases-loaded single against Milwaukee closer Josh Hader that scored 3 runs with 2 outs in the 8th inning, thanks in part to an error by rookie outfielder Trent Grisham. And the Nationals came back to beat the Brewers 4-3 in the NL wildcard game last night.
Step in there. I know he's in trouble. He gonna try to attack me with his fastball, his fastball up and the slider. I just step in there and try to hit the ball single to the middle. That's what I think in that bat. Hit a single to the middle, ground ball single to the middle, and try to.
It doesn't end there. We've got wild card game for the American League tonight. 8:09 p.m. Eastern is the first pitch. Tampa Bay Rays at the Oakland Athletics. Remember, favorite MLB so you don't miss a moment of the action. That's your TuneIn Sports Update.
Up next, a merger pulse check. Mike Santoli heads to the telestrator with a look at how 2019 stacks up against years past in the world of M&A.
It's Liz Hernandez with your TuneIn Music News Update. Lizzo tells Elle magazine that she didn't like herself growing up. She says, when I was younger, I wanted to change everything about myself. And the reason I didn't love who I was is because I was told I wasn't lovable by not seeing myself in beauty ads, by not seeing myself in television, by lack of representation. My self-hatred got so bad that I was fantasizing about being other people. But you can't live your life trying to be somebody else. To hear music from Lizzo, search today's hits on TuneIn.
In the dictionary, a podcast is this: a digital audio file made available on the internet, typically as a series, of which new installments can be received by subscribers automatically. But on TuneIn, a podcast is this.
I'm Adam Grant, and this is Work Life, my podcast with Ted. I study how to make work not suck.
And it's defined like this.
Blackout is a suspense-filled thriller from Endeavor Audio and Q-Code.
From news, sports, to pop culture, comedy, and beyond. Define your own podcast possibilities on TuneIn.
TuneIn puts you on the sideline for the 2019 college football season free all year long. With college football on TuneIn, hear the home and away call for more than 140 schools live, regular season matchups and rivalry games, conference championships and bowl games, the college football playoff.
Throwing, he's got it in stiff arm, end zone, touchdown!
You can listen to it all for free at home, on campus, or on the road. Hear the excitement and pageantry of college football all season long, free on TuneIn.
If you've tried college but never finished, SNHU lets you transfer up to 90 credits toward your bachelor's degree.
It doesn't matter how old you are, you can do it. You can finish.
Finish your degree at snhu.edu.
Who will start this bidding at 100 guilders, looking for 100?
In 1637,
I'll bid you my house. Sold.
a tulip was worth more than a house. Until it wasn't. No matter the market, and up to a 4% return guaranteed.
Introducing Inspirato Pass, the world's first luxury travel subscription. Enjoy endless travel for $2,500 per month with no nightly rates, taxes, or fees. Browse thousands of luxury trips and custom experiences in hundreds of destinations around the world, all at an extraordinary value. Never pay a nightly rate again. Inspirato Pass. Look, book, stay, repeat.
Some run from the weather. But with the most capable and luxurious SUV in its class, you can run through it. Jeep Grand Cherokee. Hurry into Jeep Adventure Days for a great deal. Now get $2,750 total cash allowance on select 2019 Jeep Grand Cherokee models in dealer stock.
Let's send it over to Mike Santoli for his final dashboard. Mike.
Well, alone together. This is actually a little bit of a check on corporate coupling volumes this year. M&A
that's
volumes
so clever.
through the. I know it's. I'm really trying to spice it up here today, Morgan. This is through 9 months. Obviously, the third quarter just ended on Monday. Merger market tallies up the volumes. This is just broken up by quarter. So this is M&A volumes by quarter in trillions of dollars. So right here, what you see is essentially. You're roughly on par with the three-quarter pace we've seen over the last 5 years or so. If you annualize this number, you'd still be down 7% versus last year. And arguably, maybe you're going to see a little bit of a slowdown in the next couple of months just because of some policy uncertainty and other things. One of my takeaways on this is that given the fact that the overall value of market cap in the world is up relatively substantially over the last 5 years, you've not really seen a rise in M&A to the degree you might otherwise expect, even though bond markets are very generous right now and financing a lot of deals. It just seems if companies are not in that mode of feeling as if they have to buy scale, whether that changes or not, it's unclear. But, this expansion's been going on, this cycle's been going on a long time, and it hasn't really gotten into a frenzy.
For the investment banks, it's been a good year for IPOs and debt issuance, but that's likely to fall off quite a lot in Q4.
Exactly. Yep.
Mike, thank you.
All right.
Up next, we're all over today's major market sell-off. The Dow closing down 494 points, about 1.8, almost 1.9% today. We'll get the bull case, though, for stocks when closing bell comes back.
This is Laura. She's a can-do spirit.
The relaxing sound of fresh, cold running water. And you can have it in your kitchen. With amazing savings on Samsung fridge freezers at Currys PC World. Like the RB31 with its chilled water dispenser for only $399. Or upgrade to the Samsung RS8000 American-style fridge freezer with water and ice dispenser. A huge 609 litres of storage space. At just $104.9. How relaxing. At Currys PC World. Energy